If you are serious about building wealth, protecting it, and passing it on, this is where the real leverage is. Hey, everybody, Matt Landon here, and welcome back to Money and Meaning. Now, today I want to talk to you about something that gets way less attention than I should, which is tax bracket management. Now, hang on, don't zone out. I know that doesn't sound as exciting as a market update or a new investment trend, but if you are serious about building wealth, protecting it, and passing it on, this is where the real leverage is. And this is why it matters right now. We are headed into the last couple weeks of the year. For most people, this means holiday planning, travel, and maybe a little bit of reflection, maybe even some setting your intentions for next year. But for high net worth families, this is go time. And the reason is because how you handle your taxes right now could save you hundreds of thousands over your lifetime. I'm not just talking about looking for more deductions in December. I'm talking about managing your income intentionally year by year so that way you pay taxes when rates are low and avoid them when taxes are high. This is what we talk about when we mean, or this is what we mean rather, when we talk about tax bracket management. Now, let me give you a quick example. Let's say you recently retired. You're not taking Social Security yet. You've got some cash on hand, maybe a brokerage account, and a nice sized IRA that's going to require distributions once you turn 73. This year, your income is lower than usual. So the IRS says take advantage of the 12 or 22% tax bracket while you can. But what happens when those RMDs kick in? Suddenly your income jumps and now you're sitting in the 32% tax bracket with Medicare surcharges and a bigger tax bill you can't avoid. This is what we're trying to prevent. So what can you do before December 31st? Now, here's a couple smart moves that we're helping families make right now. One of them is Roth conversions. This is kind of obvious. You can convert a portion of your IRA into a Roth on purpose while you're still in a low tax bracket. You pay some taxes now, you lock in this low rate, let the money grow tax-free forever. No RMDs, no surprise tax hits later. And your heirs, they get the Roth account, not the tax bill. Another thing, realizing capital gains at 0 or 15%. If you're in a lower tax bracket this year, you might be able to sell appreciated stocks and pay nothing in capital gains. Yeah, 0. This one is huge for early retirees or with those with temporary dips in income. And another one is charitable giving with a strategy. Let's say you're already giving, and a lot of our clients are. This is where we take it a step further. We can do something where we bunch up multiple years of giving into one, push you above the standard deduction, really maximize that itemized deduction, and you still get that standard deduction or over a couple other years. Or we set up what's called a donor advised fund, do something similar, take that full deduction and spread out the giving over time. If you utilize a donor advised fund, that's a great way to also minimize the capital gains hit. I really love to give appreciated stock, not a cash. It's smart, it's structured, and it makes your generosity go further. It gives you a bigger impact. Another thing you could do is giving while exemptions are high. So right now, the lifetime gift and estate tax exemption is over $13 million for an individual. It's about double that for a couple. But in 2026, we're not going to see it dropping, but there's a potential that it's going to drop into the future because we have a current tax law that, yes, we've seen this extension with the big, beautiful bill, but as we all know, it's only a law until Congress acts and changes it again. So if you're thinking long-term legacy, especially business owners or families with generational assets, now is the window of time to take action. So here's the bottom line. When people think tax planning, a lot of times they're thinking about what happened last year. But what that is that's tax preparation. But the best results come when you're looking forward and you're making intentional decisions about when and how you realize income. And for high net worth families, that kind of planning can cut your lifetime tax bill dramatically. Not just this year, not just next year, but for good. So here at Semmax, this is the kind of stuff we live for. We love to help you make confident, strategic moves, and not just during tax season, but not just right now, but when it matters most. So here's the thing. You've got a window of time to act this year. And if you're not really sure, or if you don't know quite what to do, just give us a call. I'll go ahead and tell you, December 31st is a deadline that the IRS is not going to extend. So let's talk about how to take advantage of the tax brackets you're in today before that opportunity closes. So this has been Money and Meaning. My name is Matt Landon. Thank you for being here. And more importantly, thank you for taking action to protect what you've built. Have a beautiful day.